Okay, folks, welcome to Sunday Night Futures. Let's get the futures up here and let's take a look at what's going on. I've already taken a sneak peek at crude oil. We're beginning here, which we don't normally do with the exception of last week, because this is what's going to drive the market one way or the other. Now, obviously, a very, very busy weekend of headlines, and it's certainly going to probably carry over into the morning. At current, we have crude oil prices up about 4%. They were up higher. We went up as high as 78.40 the barrel. Right now, we're at 76.77 with lots of volume, a ton of volume. Right now, it looks as though we have, on a very, very short-term basis, let's go to a 5-minute chart, 5-minute candlestick. The bears are in control, taking us off the highs. I want to take a look at volatility. Volatility spiking here about 3.5%. Again, we were higher. We're off the highs of the session, which opened up less than 5 minutes ago. Let's take a look at the price of the dollar. Dollar moving up higher, off session highs. Yields are actually moving up. We were lower. We are now getting a reversal bar. I wouldn't use a 5-minute reversal bar to dictate a trade, but I would use a 15-minute bar. I mean, this is a pretty bullish bar, but we still have another 10 minutes left to go until this candlestick closes out. So what that would mean is that while we may be seeing a little bit of flight to safety into the U.S. dollar, we're not seeing a flight to safety into U.S. bonds, which is what really matters to us. Normally, in crises gone by in the past, you could rely upon money going into gold, money going into the dollar, money going into bonds. It's just not playing out that way anymore. Let's take a look at the equity futures. NASDAQ down about 0.75 of a percentage point. It bounced off of support. I think we go lower here. We may get a filling of the gap up here, either at 21,762 or at 21,797 on the NQ. May. Let's go to a 5-minute chart. Let's take a look at the E-minis. And let me go to comments. We'll spend a moment here. We're getting some follow through to the upside on the ES. Sean, welcome. Franklin up in Montana. Welcome, brother. Okay. Hey, Lee, welcome. Welcome. Okay. So Danny, welcome. E-minis down a 0.5 percentage point. I want to know if we put in new session lower lows. Let's take a look at the rut. This is the small caps. Small caps down 0.6%. Similar setups as to what you're seeing on the NASDAQ and on the S&P 500 and probably on the NASDAQ as well. My mouse is just not working. I think the battery's dying. Let's take a peek at natural gas. Natural gas had a very strong week last week, and we are up 1.72%. I'm surprised we're not up higher. Here's the 4-hour view of natural gas. Rough day on Friday. I wasn't watching it on Friday, so I didn't get the chance to watch this at all. Let's take a look at silver. Silver's actually down. Very surprised. Platinum also down. Gold up by nearly 1/3%. We were up higher, but we were fading off the highs of the session. Palladium, which we own, they're selling the metals here. Very, very strange that they're selling the metals. I thought that money would be going into them, but it's not. Strange. Gasoline. Wow, this is not good. This is not good. Gasoline, RBOB gasoline prices last week were up, I think, about 3.5% on the week. Last week, now we're up nearly another 3% this week. I mean, this is crazy. This is what causes panics in the market. And we'll talk about why this is happening in a moment. Copper prices. Mr. Tim, Bob, great to hear from someone we can trust. That means a lot to me. Thank you very much. I try to keep it as real as possible. Thank you very much. I wear that as a badge of honor. So copper down 0.7%. They're selling the metals, both precious metals and industrial metals, and silver could be both. Strange. You need silver for all these missiles too. I'm very surprised to see them down. Let's check back in with, first I want to see who's benefiting in the currency market. The euro? No, definitely not. Yen? Definitely not. They're both getting hammered right now. And it kind of makes sense because last week's price action on the dollar, I went over this with members on the week ahead commentary, was extremely bullish. We should expect a continuation breakout. And we're seeing follow through already this week. So that's probably why you're getting the weakness in the dollar sensitive names. But honestly, gold is more dollar sensitive than what is silver. But and gold is up right now. So that could be a reason why the precious metals names are down. Let's check in with agriculture. Let's go to a weekly chart. We never got the follow through. Let's go to a different chart, corn. We never got the follow through that we wanted last week. Consolidating at best right now on corn. I would not buy it. ZW. This is probably going to break out. I want to check out seasonality on Wheat, this is a very bullish chart. We've begun to break out here. Seasonality is really important when you're trading agriculture. I'm just making a note to myself because I'll forget. ZS, this is soybeans. And they're just consolidating here. A very tight Bollinger Band squeeze. This is a bullish setup. This may rally as well. So maybe even soybeans will check out. And you can buy these electronic funds, WEAT, and also SOBN, SOYB. I think it's SOYB for soybeans. Talon, what's up, everyone? Smash the like for free education. Thank you very much. Yes, please smash the like button. I really appreciate it very much. Thank you. Okay. Let's go back to equities for a moment, see if we are firming up here. Yeah, you kind of expect to see this type of price action on a big gap lower like this. Now, the question is, do you get follow through on a bullish reverse? This is a 15-minute chart, a 15-minute reversal candlestick, which is going to close out in about 45 seconds, not even. So if we get follow through here, we could possibly go green by tomorrow morning. But if we get a gap lower on the next 15-minute bar, we just may press lower here. Very hard to tell this early in the trading session. I'll be honest with you. A lot of the things that happen by the federal government happen right before or prior to the opening of the futures action on a Sunday evening. So they hope to minimize any damage to the markets, and a lot of times it's successful. Now, this new 15-minute bar just opened up. I want to know if we make a new higher high here. And if we make a new lower low. Okay. All right. So a lot to unload here tonight. A lot of speculation about what's next. Listen, only God and 5 people in the United States know what's going to happen next on the part of the U.S., which is probably nothing. Another 5 people on the Iranian side know what's going to happen. The ball is in their court at this point in time. Now, we're going to talk a little bit more about it in a moment. Let's go to comments here. Let's wrap up comments. Hey, Bob. Hi, chat. Hey, TF Hatter. Welcome. Are things settling down, or should we short oil? No, I wouldn't short oil. Not yet. We don't have the signal yet to do that. Way too much headline risk. And we're going to talk about oil in a little while. But right now we're seeing the equity markets begin to find some support here. Let's see if we break down, we break out. So going back to the markets, I was thinking about what's going to happen next, and where are the Iranians? And where are the Iranians? If I were going to execute on a plan, I would do it right after the futures markets open up, or right at the 9:30 bell tomorrow morning, to really disrupt things. So, the United States government tries everything to try to avoid disruption of the equity market. So let's get to it, folks. Tonight's show is going to be brought to you by TrendSpider, our partners. Head on over, use the link below on Twitter, on YouTube, link above on Facebook and Twitter. Automated technical analysis, automated trend lines, automated Fibonacci's, automated everything, scans, back testing, trade alerts, et cetera, et cetera. We use it all the time. I'll be demonstrating it tonight. I'm not going to go through all of this. Right now, they're offering a 32% discount. Use my links. You get 35% off. Let's get to the show. So going into the new week, we are uh, very much hedged against the sell-off in the market. We are very short of the triple Qs. And the reason why we're short of the triple Qs is because we're seeing topping action here. You saw for the past 2 weeks, bearish reversal bars, and we hit resistance. We also hit fractal resistance levels, or came close to fractal resistance levels, and we're seeing reversing, and we're seeing volume on a weekly time frame pick up. So I'm not going to be the least bit surprised to see a further pullback this coming week on the triple Qs. Now, where I think we're going, if in fact we do open up week tomorrow morning, I think that we're coming down here. I think we're going to retest 500, maybe 501, 503 in that ballpark. But I think we're going to have a fairly measurable pullback here, at least in the short term. If there's no response on the part of the Iranians, this is going to be forgotten about very, very quickly. So you can't rule out some sort of a response on the part of the Iranians. Or if our post-damage assessment indicates that we didn't cause the damage to knock out those facilities, we may be back in there again with B-2 bombers and more Moabs. SPY weekly time frame, again, closing out the week last week, second consecutive bearish key reversal bar. I mean, these are not great charts. They're weak. It's a sign of a potential double top on the triple Qs and on the SPY. When I look at these charts, I'm saying to myself, we have an expensive market. I'll go over that in a moment. We have the technical setting up poorly. This is a market that is looking for a reason to go down. Economic data was not great last week, and you certainly don't have the Federal Reserve on your side. We're also going to go over Fed data in a moment. So we're going to come back to these charts in a moment when we do stock chart requests. Let's go over the economic data that is coming out this week. We had very weak economic data last week. And this coming week, we have on Monday, we get U.S. Services PMI. That's the Purchasing Managers Index. Tuesday, home prices, consumer confidence comes out. And that's for June. Why are they reporting June in June? I've never seen that before. Strange. Thursday, advanced retail inventories. Watch these inventories. You see inventories rise. That is not good for the retailers. That means they may have to do price cuts. Initial jobless claims. We get that weekly, very, very important. This week, we're going to get durable goods. Very important number. That's the demand for big ticket items that last a number of years, washing machines, dryers, etc. GDP, second revision. Friday, consumer sentiment. And of course, on Friday, we get the PCE. This is the Federal Reserve's favorite measure of inflation. So, a busy week for economic data. Now, looking at the probability of a ease in July, improbable. Now, this has changed quite a bit. The expectation for a no move or to stay the same yesterday as opposed to today was 85.5. A week ago, it was about 77. From yesterday, we're down a little bit, not much, but a greater possibility of an ease, but highly improbable they're going to go with a cut in July. September, I mean, not much has changed here. October, not much has changed. So the events of the weekend thus far, no real impact on the Fed Watch tool. In terms of earnings coming out this week, Carnival coming out on Tuesday, FedEx, that's a big one. General Mills, Micron Semi on Wednesday. Nike, which I've boycotted for I don't know how many years now. Uh, they report on Thursday. As a matter of fact, I was cleaning out my closet the other day. I found an old Nike T-shirt. I threw it away. It was a good T-shirt. I won't even give it to anybody. I hate the brand because they injected politics into their product. They should never have done that. As for the Federal Reserve, so I wouldn't call this much, but over the past couple of weeks, we've seen the Federal Reserve stop selling debt off their balance sheet. And in fact, last week, their balance sheet ticked up a little bit. Now, this is not an anomaly. It happens from time to time. The question is, if we begin to take out prior highs, does the market interpret that as a stealth Fed cut? I think that it does, because that'll bring down longer-term Treasury yields. Remember, a Fed rate cut only impacts short-term yields, not 10-year, 20-year, 30-year debt. This can have an impact on those longer-term yields. It's like a yield curve control. So watch for, in the coming weeks, the possibility of the Federal Reserve beginning to build up their balance sheet. That would be quantitative easing yet again. Now, to remind everybody where we've been, since from 2019 due to COVID all the way up and through 2022, we were building the Fed's balance sheet. Back here, this spike up was the regional bank crisis, and ever since we have drifted off yet again. They've sold a lot of debt, but nowhere near what they must to get back to normal. To get back to normal, they need to go back to $800 billion. Right now, they still sit at around $67 trillion. Sorry, $6,673 billion. Got to move that comma in the right place. So the Federal Reserve may be doing something here. Way too early to make that call of them helping to support the bond market. As for the market in general, we remain very overvalued, folks. This is a market that could easily get tipped over. Easily. We're seeing weakening economic data. We're seeing the price of commodities rip through the ceiling. You're not seeing any hope on the horizon for the Federal Reserve to step in here like the white knight in shining armor to begin to cut rates. So with all the geopolitical risk on the table, why buy stocks? It just doesn't make sense. At least U.S. stocks. Now, I mentioned to members several weeks ago when the conversation about an attack on Iran by the United States, what was I concerned about? What I was concerned about is what's trending right now on X, Twitter, and that is the closure of the Straits of Hormuz right here. This is only something like 15 kilometers in width, and it's controlled by the Iranians. And on average, it manages 20% of the world's oil. Now, I'm not a big believer that they're going to shut this down because one of the benefactors of Iran is China. There is no pipeline from Iran into China. We investigated this over the weekend for the weekend commentary. So who gets hurt by the closure of the Straits of Hormuz? China. Now, I think that since China has not been, and this is I got my information from my father to give kudos out to my father, who made a very valid point. He believes that for China's quietness about this attack, that we would provide them oil to keep them from hurting, but they just need to not knock us in public and support us. So I haven't heard much out of China with regard to this attack. I'm sure you're going to get condemnations. They have to do that. But other than that, you're not hearing all that much. Same thing out of Russia. You're getting the smaller countries like North Korea making complaints. Pakistan, who really cares, to be honest with you? They're talking about sending bombs over to nuclear bombs over to Iran. That's concerning. I don't think that's going to be allowed. I don't know how we're going to stop it. I'll leave that up to the CIA. But clearly, right now, this is what's causing the price of oil to skyrocket the way it is. And right now, we're up, I'm going to say, only 3%. We were, Jesus, the mouse is really bad tonight. Usually it's the battery that's dying off. Now we're down below 3%. So we're selling off pretty hard here on oil off the highs. And we saw that last week as well. What was last Sunday? The 15th. So yeah, here was last Sunday when it skyrocketed up higher. We've taken out those highs, but we sold off, consolidated. Now we have a breakout. So I don't think that the Strait of Hormuz is going to be the target that the Iranians are going to want to focus on. Now, they have come out. The Iranian parliament has backed the closure of the Straits of Hormuz. That doesn't mean they're going to close them. The one concern I do have is that you have tankers which have entered the Straits of Hormuz, including Chinese tankers that have now done a 180 and turned around and gone back. So I don't think that this is going to be primary target number one. Were I the Iranians, I would make it far more U.S. specific, and that would be attacking our power grid. That would be devastating to the United States in many, many ways. Devastating. And our power grid is a train wreck. It's old. It's antiquated. We've spent so much money on foreign wars we have no business with being in that we could have rebuilt our infrastructure 10 times over and still had money in the bank. But we didn't. We chose to go to war, and we now have our flank, which is very much exposed to an outage, an EMP. It's an electromagnetic pulse that can knock out our systems. You have, under the Biden era, you had hundreds, if not thousands, of potential terrorists come across the border. So we have cells here in the United States that could be launched. That would be very, very problematic. And it could take years to hunt them down, find out about them. Sleeper cells, they may not attack for another couple of months. We have an alert that's fired off here. YM. I think the Dow just put in new higher highs. Yeah. We're only down now. Well, it's showing a little bit of reversal. We're down now about 1/3 of a percentage point. Let's see if we rally here. Okay. So this is my major concern. Not necessarily the Straits of Hormuz, but if the Iranians do not have the capability to launch this attack, which I find hard to believe, they've had decades to literally put this in place, then the Straits of Hormuz comes into play. Now, what we'll be watching this week is a couple of things. One, we've been watching, we'll go to the Bitcoin first. Bitcoin has been selling off this weekend really, really hard. It's bounced back here a little bit. We were down well over 2% earlier on the day. But this is now a confirmation breakdown on Bitcoin. You know, I'm premature in saying that. Let me caveat that. I'm going to put it this way. We are at the threshold of a confirmation breakdown on Bitcoin. When do we have a confirmation breakdown on Bitcoin? That is a great question. I'm glad you asked. If we close down below 100,400 on Bitcoin, that will be a confirmation breakdown. This bar will close at 12 a.m. this evening. So keep an eye on Bitcoin bouncing back here short term. We're also going to be watching out for the yield curve, the bond market. The bond market is going to dictate which way the stock market goes. Always does, always will. The bond market is far larger and far smarter than the stock market. And the yield curve, which I really haven't covered all that much over the past several weeks, is because it's done nothing. But the scary part is after, you don't focus on something for a few weeks because it's not doing anything, and then you revisit it like I did over the weekend commentary, you realize, holy crap, this has been consolidating. And we have a multi-week consolidation. We've digested this big move up here in, what month was this? May. No, that can't be May. April, yeah. April. And ever since that surge up in April, we've been consolidating. No new monthly higher highs, but we're consolidating. This is still a healthy breakout on the yield curve. Yield curve steepening is not bullish for equities until such time as the Federal Reserve comes riding in on his white horse, shining armor to save the day. And it's because of the crisis that they created. So we have an overvalued stock market due to cheap money. It still remains cheap, yet they're going to have to come back in and make cheap money cheaper again. So we're going to be watching with great interest the yield curve, especially on how we close out the month of June, which is very close to coming due. Now, where do we want to be looking? I've talked about this several times over the past year, and most recently I was talking about when I just got back from Great Britain and Ireland. I was talking about investing out of the United States. The United States has had the greatest 16-year run relative to other markets in history. So if you look at what we're doing now, our debt, the headlines, inflation, the quagmire that is the infrastructure, the political system in the United States, why not look elsewhere? And you can see that other markets, Poland, Greece, up over 40% in 2025 alone. The EU zone, that basket case of a bureaucratic, a technocratic mess is up nearly 24%. Whereas the United States, we're up only 2.2%, barely holding on to the green. And by the end of this week, we could be back negative yet again. So clearly better opportunities in other markets. So the reason why I bring this up is that many of these markets do well when the US dollar goes down. Why is that? It's because their debt is denominated, because the dollar is the world's global reserve currency still. It's denominated in US dollars. So if the US dollar drops in value, what happens to the debt of emerging markets? Well, it gets cheaper because they're paying back in dollars, cheaper dollars with their own currency. So their economies flourish, especially if commodity prices are going up and you're investing in countries that produce commodities. Well, they're doing well with commodities. They're paying back their debt in dollars that are getting cheaper. That's great for them. So long story short, I'm looking towards emerging markets outside of the obviously outside of the United States, investing outside of the United States, whether it be in developed markets or in emerging markets, ex-China. I do not want a position in China. Just don't want it. I don't trust their markets. So we are invested in a ex-China emerging market ETF. We're looking to buy more. However, that ETF took it on the chin last week after a huge rally. So I think it's going to come in further, and we'll be looking to add more on a pullback once we begin to see the dollar weaken. But I still think the dollar goes up from here, short term. And if you're wondering why my glasses look askew, these are my spare glasses. I don't know what I did with my regular glasses. I was walking around the house before. I put them down somewhere. So these are all twisted, sat on. I don't know if you can see that. I must look like a nerd. Anyway, let's do some chart requests. What time is it here? 6:38. We have time. First, I want to take a look back on the futures. Really quiet on the Dow. NQ still down about 0.41%. It's a lot better than where we were earlier. CL, this is light sweet crude. It's given back a lot of real estate. Natty gas, still up but off of its highs, 1.43%. Gold, it's given back a lot of its gains, still up 0.14%. Let's see if silver's made a comeback here. Silver has made a comeback. Silver looking good here. Members, I may be sending out alerts tomorrow on silver. I like the setup here. I just like silver. We already own palladium. Let's see if that's made a comeback. Dow just made new session higher highs. Palladium is down at current. Okay. Our alerts are set. We're good to go here. Let's see what's going on with volatility. Volatility still up 2.5%. NASDAQ down only point. Well, it's coming back in a little bit, down about 1/3%. Lots of volatility in here. 10-year yield remains down. All right. Let's do some chart requests. Folks, don't forget about TrendSpider. Link below on YouTube, link above on Facebook and on Twitter. Get that 35% discount code. And let's get started on our chart requests. I want to go over first off wheat and soybeans. I think soybeans, SOYB. I want to go over seasonality. These are weekly charts. I'm not sure why. Oh, this is a weekly chart. Okay. Okay. Let's check out seasonality here. I don't like this chart right now, either the daily or the weekly chart. I wouldn't be a buyer. Let's just check out seasonality. The month of June is the best month out of the year, but it's not great odds. It's up only 64% of the time in the month of June. Let's go to a weekly view here. Not a great week. This is one of the worst weeks out of the year for soybeans, and I don't like the chart right now. We'll revisit it next week. I don't think I'm going to be touching it this week. Let's check out wheat. Maybe a different story here. Let's go to the weekly chart first. Yeah, this is looking much better. Yeah. So you can tell I just hit the indicators tab, and this is fractal trends. And we've been consolidating really nicely. And last week we broke out. Very, very nice. I think we're heading up here to around 525 on WEAT. Let's check out seasonality. This week is not great. However, the following week is fairly good. Let's check out the month. Really a coin flip on seasonality for wheat. The best months to own wheat are September, October. I believe that's harvest season. Could be wrong about that, but I believe that is. Let's go over to the forum, check out what requests have been made. I'm going to go to comments in a moment. Make sure I got everybody. Sean, APLD. BA. For disclosure, we own BA. CCJ. Bonnie Bean. BAI. QBTS. Talon Roblox. RBLX. Lee Cable. NFE. Is that it? That's it. All right, let's get to it. Let's talk charts. Let's begin with APLD. First, before I get into it, let me say hello to people that joined in. I acknowledge them. RK, this mouse is driving me crazy. Do you hate Goya for injecting politics into their brand? I believe that they were conservative in their views, or I a shareholder. I don't want a company I'm invested in. I don't want a company I'm invested in giving their political opinion, because either way, I don't care if you're Republican or Democrat, conservative, liberal, right wing, left, whatever your label is. If I'm invested in your company, I don't want to know your politics, because when you say what your politics is, you just ticked off half the population. It's stupid. I don't know why companies do it. So, do I hate them? No. And perhaps if I said I hate Nike, I don't believe I said that, but maybe I did. I don't respect them for doing that. I think it's foolish. Adidas opened a big new store in NYC. I like Adidas. The lovely Jody, welcome. As long as you're here, that's all that matters. Scott, checking in late from Florida. Let's hope it calms down and everyone involved uses a clear head and acts responsibly. Shout out. Agreed. Something big is brewing in the markets. Unfortunately, I agree. Gay, I haven't heard from you in a while. How you doing? I thought silver had an island top. Well, silver is very, very volatile. You don't know. You don't know. When you think you know, you don't know. It's the same thing as with natural gas. So, we'll come back to APLD here. So, to your point, I wouldn't say an island top, but it did have a bearish reversal bar 2 back-to-back weeks. Highly consistent with the equity markets, to be honest with you. Let's go to a daily view. And to be fair, we did break. This is not today's price action. No. To be fair, we did break support last week, but that doesn't mean that we can't come back and treat this upper band of fractal resistance as a new upper band of resistance. We could still grind it out higher. As long as we have geopolitical risk on the table out there, you can't rule out higher highs for these names. Would I initiate a new position on a surge up higher? Probably not. But if I saw a good intraday setup, 4-hour time frame, yeah, maybe I would. Maybe. Let's go to a 4-hour chart here. This doesn't include the current price action. I don't really see it set up, but if you use the current price action, which is not reflective of, maybe there will be. We want to keep an open mind. But to your point, we had a reversal bar on the week. We had a break of support on a daily chart. Therefore, the macro view right now on silver is probably moving lower. Longer term, we remain bullish on silver. We haven't sold any. All right, let's go back to APLD. Okay, weekly chart, APLD. You're coming down to 975 and perhaps even lower. Let's extrapolate this out. I would use a price target of 928 on APLD. You know, perhaps you're going to get support here. I would bring this down lower. Here, $10 a share. I would prefer to see 928 because this candlestick, many times when you get a sell off with these big long candlesticks, they come in threes. One, two, another one. Then you look for your inside week or a bullish reversal week. That's your indicator that it's safe to go back in the water. Right now, it's being distributed. I wouldn't be a buyer. Let's bring up volume. Volume dropped off last week. Let's go to the daily view. Holding support at that $10 per share mark, but we continue to put in new daily lower lows. Descending wedge formation forming. If they gap this down, I think that that's your entry point on APLD. Let's check out the stochastics and what they're doing. They're still dropping. I think there's still some pain here to be had on APLD. Yeah, both lines on Stokes trading down below 50. I wouldn't chase a rally here. I look for a bottoming of the Stokes and then have them hooking up at a support level, and you nibble, nibble, nibble. Build your position. And in fact, one of the ideas, we're doing a lot of revamping of the members area. One of the ideas that was given to me by one of our members, if not a couple of members who agreed that we should have it, is a conviction meter. And what that means is that, you hear me talking about nibble, nibble, build a position. So the conviction meter, I know I have a copy of it here somewhere, is basically going to show where we're at in terms of our buying. If you bring up the conviction meter, think of it as a fuel tank gauge. Are we full, empty, three-quarters full, etc.? So you'll see at the bottom of the gauge, we're in accumulation phase. So we're at 20% accumulation or 20% position, you know that we're going to be buying more. So that's going to help you gauge where we're at with the intended allotment of shares that we want to build. That's coming out in probably by the beginning of August, maybe sooner, but I want to be conservative, beginning of August. So that's coming out, and I'll be able to share that with members pretty soon. So I'd be looking for a gap lower, bottoming out of Stokes. Then you can start nibbling on the shares. I don't see a reason to go buying here whatsoever. I think that any rally is going to fail. So I would avoid right now. I spent way too much time on that chart. BA. I own it. I'm probably going to set a stop here on a new weekly lower low. We did not have a new weekly lower low last week, but I do not like the price action of Boeing. I'm not going to sell my entire position, but we bought Boeing way down here when nobody else wanted it. So right now we made a very, very nice profit. A, I don't want to see it drift away. And B, it's a big portion of our portfolio. It's time to feed the geese a little bit and preserve those profits. So, and I would consider buying back at lower price targets, maybe at around 183 thereabouts on a weekly chart. Right now, I'm thinking about raising stops on Boeing, new weekly lower low, probably going to book a little bit of profits there, raise capital. And it depends upon what the equity markets are doing in general. If we're seeing the Dow Jones and the SPY make new weekly lower lows along with Boeing, then why am I fighting it? Let's just preserve some profits. Right now, daily chart. Yeah, I'm not loving it. I don't speak my book. We're putting in lower highs. And we could go all the way down here to, 189 is price target number one. 170s could be another price target. So I would be careful here with Boeing right now. As much as I like the company, longer term, short term, I think the market is in trouble. Again, I'll bring you back to the chart of the triple Qs, of which we are short. This is not a pretty chart at all. So I would avoid Boeing right now. And that could change this time next week. CCJ, Franklin, you hit your price target here. This is a uranium play. I think we spoke about this fractal resistance level the last time we went over this chart. You're there right now. I would consider booking some profits here. Let's go to the daily view. Excuse me. We saw volume to the downside last week as well. Now, the daily chart looks okay. Maybe you want to set up a trailing stop. I think if you break down below 67 bucks a share, you'd probably want to book some profits here because that would be a break of support. That's my take. I'm sticking to it. Let's see how they're going to open this thing up on Monday. 30-minute view. Not a bad setup on a 30-minute time frame. This to me looks like a bull flag setup. So if you break out, I would set a trailing stop loss order or a static stop loss order. Choose a support level. You want to use the fibs. You can take the fibs out. Fibonacci support at 65, 68. You have a number of opportunities here to set up static stops at which to get taken out of the trade. Let's take a look at BBAI. Still looking. Yeah, I'm still in UNH. Yes, I am. And I don't like the price action of UNH on, let's bring it up since we're talking about it. I didn't like it on Friday at all. I was looking at it on my phone. And by the way, I'm in jury duty again this week. A ridiculous. I tried everything to get out of jury duty. They wouldn't have it. I don't like this chart. I think that we're probably going to press lower, probably down to 295. Do I think we're going down to 270 like HSBC predicted? I don't think so, but you never know. If the market rolls over, it's going to trade with the market. You're not seeing strength in staples, and this we consider to be a staple, healthcare, but it's not great price action. So I'm a little bit concerned about it. Very, very short term. Longer term, I'm fine with it. Gay, you are very, very welcome. Franklin, you are very welcome as well. And Mr. Sean, very welcome as well, my friend. Okay, let's continue on. BBAI. Big Bear AI. I like that name. Weekly chart. Yeah. That's the automated trend lines, baby. I don't remember. Obviously, I did go over this once before. I put this line up here. Automated trend lines, folks. They come in handy. So when I first looked at this chart, immediately what jumped out at me were these topping tails here on these candlesticks, and you had the same back here. So it just made sense to check the trend lines, and there you have it. The automated trend lines picked it off. You have resistance immediately above. Now, when would I be a buyer? If we gap up and close above this line in red, which is at or around $4 a share, but we need to close the week out above that mark. On Tuesday, if it's trading above $4 per share, I don't care if it's $5 per share. I'm not buying it. I want to make sure that it holds this breakout point, does a pullback and retests it. And then you get your follow through. So it's like a 3-step process. Breakout, maybe you can nibble a little bit there, scratch the itch, retest, buy a little bit more, becoming interesting, follow through, get aggressive to the long side. So that's what I'd be looking for. Absent that, I'd be looking for a pullback because it's clear that you have resistance above. Volume was very, very good last week, but I'll bet you if I drill down, you're going to see on a 2-hour time frame some big down volume bars, and you did. Let's go to a daily chart. Not a bad daily setup here. It's grinding up. You know, I don't even want to do that. Let's do this. Let's get rid of this. This to me is a bullish setup. I think that this is probably going to pop up higher. Would I buy it in anticipation of a pop up? No, because you have weekly resistance above. We don't do it that way. I would allow it for it to break out on a daily time frame. And again, watch that $4 per share mark. Does it close there? Most importantly, does it close there? And then I would entertain a long trade. Now, if it fails to break out and it pulls back, where would I be looking to buy? Let's bring up the Fibonacci's. $3.49 looks very, very attractive to me. And I didn't mention this. Look, you have big volume here. Usually on a consolidation pullback like this, you don't get big volume. You had big volume. So that tells me there was a lot of back and forth between bulls and bears, but net, you had more bears on Wednesday through Friday. So that is BBAI. QBTS. Let's go to the weekly chart first. This is a tough one. And when I'm in a position and I wonder what to do, I ask myself the question: would I buy it here? No, I wouldn't. It's holding a support level. We had no follow through to the downside last week versus the very horrible price action the prior week. Daily chart's not inspiring to me. You have stochastics, which are down below 50. You know, maybe they could hook up. I wouldn't be a buyer until they hooked up. Now, another way to trade this would be a breakout trade. You can consolidate here a while longer and be a buyer on a breakout. Let's call it here $16 a share. And there you go. Set it and forget it. Here's the watch list. I put these on my watch list. I don't even think about them. I let the alert fire off. I revisit, reevaluate, and decide whether or not I want to make the trade. I call it set it and forget it. Because if you obsess over these stocks and whether or not it's time to buy, That's not good. That's not good behavior. You want to focus on setting up good alerts and then revisiting the breakout and saying, okay, is the rationale of as to what is happening right now, does it make sense to get long here, or is it best to wait or avoid? So I'm not bullish here. I think you're just in a consolidation. I'm not bearish. I think you're just consolidating. That's simply is that. I wouldn't be a buyer yet. RBLX. Let's go to the weekly view. Be careful here. Again, the power of the automated trend lines, folks. We hit the upper band of resistance last week and we backed off of it. Does that mean you should sell? No, we can consolidate. I have another manually drawn line here. I'm going to make this white so you can see it. We can consolidate in a range here, backing and filling between the highs of last week at around $103, $104 per share, between and 102 for a few weeks and then proceed up higher. So I'm not saying sell here. I'm just saying that you shouldn't be a buyer right now of the shares because you're at weekly resistance. Daily view. Friday, what I could see happening here. Let's go to the 30-minute chart before I speak. Oh, there's a battle going on here at the close. Wow. Yeah, we broke support. Final 30 minutes. Listen, if we get a move up, I wouldn't buy here. Simple as that. I wouldn't do it. You know the reason why, weekly resistance. But if it does move up higher this week, it's coming up here to around 102.13 per share. I would be out and then wait for the pullback to around 102. Last chart up is Bonnie Bean. Great to have you. Thank you. NFE, last one for the night. New Fortress Energy, weekly view. It's a laggard. I mean, energy did well for the past several weeks. This is a laggard. Yeah, I look at this chart. I know what the energy space is doing right now. I literally start thinking about ongoing concern issues here for the stock. I don't like it. It looks as though it's going to break lower. Your Stokes are very, very oversold, but it's just not behaving well. I don't see the reason to buy this. Let's go to a daily view. Daily chart looks a little bit better. If you're going to buy it, I'd be a buyer on a breakout above $3.50 per share. You know, stocks like this that are just perpetually weak, they're just not behaving well. They weren't behaving well when energy was hated. Excuse me, it wasn't behaving well when energy was hated, and it's not behaving well when energy is loved. Therefore, it's a structural problem with the company in and of itself. So the only time you want to consider buying a stock like this is when it becomes worthy of your investment dollar. And the way it shows that is a breakout above resistance levels. Right now, you're in a big bear market. Yes, you're oversold on weekly stochastics. Probably going to hook up at some point in time, get a relief rally. For an investment, I would need to take a look at the fundamentals. For a short-term swing trade, I would need to see a breakout and a close above $6.50. Folks, don't forget, 35% discount code on TrendSpider, link below on YouTube, linked above on Facebook, Twitter. Take advantage of it. And everybody have a profitable trading week. I'll talk to you soon. Members, be well.